Hello, everybody. Welcome to today's webinar brought to you by Bursa Malaysia and managed by our company LifeChamp. Today, we are very excited to be doing this topic, passive investing with exchange traded funds. So how is everybody doing? And I hope that you have had a great week so far. So today, we're going to talk about how do we create passive income stream through the exchange traded funds that are listed on Bursa Malaysia. Now, if you're somebody who is looking to build a portfolio of income generating stocks, and you don't want to do direct investing, you want to hand over your investing skills, want to rely on fund managers, professional fund managers to manage the portfolio for you, then you can consider these exchange traded funds because they are passive investment style. They engage passive investment style. And so today we're going to look into this. So disclaimer, whatever we share in this webinar is only for educational purpose. So in no way that we give any recommendation for you to buy or sell any listed securities that we mentioned here. So if you decide to make any investment decisions, you're 100% responsible for all your investment risks. So allow me to introduce our speaker today. Now, our speaker is a financial advisor at Bullbearbursa Facebook page, and he's an associate member of Certified Financial Planner. He's also a Securities Commission licensed financial planner. He specializes on personal financial and risk management planning, and he's currently helping more than 350 clients on managing their wealth with more than 10 million assets under administration in wealth management field. And it's none other than Mr. Winson. Winson, how are you today?
Hi, good evening, everyone. Yeah, great.
All right, cool. Good to have you here, and we can't wait to learn from you. How do you do passive investing through exchange traded funds? So over to you.
Okay, sure. Thank you so much, Shane, for the introduction. So good evening, everyone. First of all, I would like to express my gratitude to Bursa Malaysia for inviting me and have a sharing with you all. It's my pleasure to be here with you tonight because and share about tonight's topic, passive investing with exchange traded fund. Okay, hold on. So let me just share my screen first. Okay. Yeah, can everyone see my screen? Shane, you can see my screen?
Yes, I can see it.
Okay, great. So tonight we'll be talking about exchange traded fund, or most of us call ETF. Okay, it has been heard by many of us recent years. But what is ETFs? So how can we benefit from investing in ETF? And how can we even start investing in ETFs? Okay, there is still a lot of more to understand, right? So today we'll be discussing on all these topics together. And we hope that everyone here can get a little bit of ideas on what ETF is. Maybe in future, we can also add ETFs into our investment portfolio, right? So who knows? Okay, so let me start my part. Okay, this one I will go through too much. Okay, Shane had introduced me just now. So actually, during my journeys as a financial advisor, I've been asked so many times about ETFs by my client. As we know, a lot of people invested in stocks, mutual funds, bonds, but ETFs is something less familiar to Malaysian because despite we heard it quite frequent, but not many of us trade ETFs. So maybe can I do just a short, checking right here. We have over 100 people right now joining us live. How much of you actually invested in ETF? Can you show me a hand, or maybe just click yes, okay, type yes or something like that. I would like to see what is the response right now. Okay. Okay, Sisi Go, yes. Okay, Shane more to read. Okay, Siti Chan, yes. Okay, so there is a few, but seems like if let's say compared to 100 people here, okay, Holly say no. So yeah, we can see that in that case, maybe a lot of us should be suitable for this topic because we can see that for ETF, a lot of people don't really know or don't really invested in ETF as well. Okay, maybe I don't know, maybe someone is actually shy, so they don't dare to like type anything. Okay, but talking about ETF, right? Warren Buffett has long encouraged investors to opt for an ETF. Okay, where he famously put his money. I'm not sure everyone heard about this story before. He put his money in 2008. Okay, where he bet that ETF would outperform a group of hedge fund manager. Okay, so he's actually betting with hedge fund manager. Okay, and the effort that Warren Buffett have to put in for ETF is zero, because they just need to he just need to buy S&P ETF index and then just leave it there. While hedge fund manager have to do a lot of job, looking at the market environment, looking at what's happening right now, what's the trend, and then they react towards it. So what is the result? Okay, maybe just quick chat with anyone heard of this betting from from Warren Buffett and the hedge fund manager? What is the result? Who wins? Anyone? Okay, the answer is Warren Buffett wins. Okay, Warren Buffett did not do anything. He just put the money in S&P 500 again, and over 5 years, outperform all the hedge fund manager. So that is why actually Warren Buffett really asks us to opt in into ETF or something like that, because by that we can actually see that ETF plays a very important role in our investment portfolio, and with proper investment planning with ETF, we can grow our wealth with minimum effort. Okay, so today we'll be discussing about these few topics here. First of all, we will discuss about what are ETFs. Okay, so things that we need to know about ETF, and most important, how can we evaluate ETF fees and performance. Okay, so without further ado, let's just start with the first topic. What are ETFs? Okay, so in ETF, right? ETF means is exchange traded fund. So it's actually a pool of investment securities. Okay, in short, your money is actually invested to a basket of securities, which you can trade in exchange, just like how you trade stocks. So maybe it's a bit how should I say, a bit technical here, but I can make it an easy way. Basically, you can just imagine that you are trading stocks. Okay, but different with stocks is that you trade stocks, you buy one company, right? If let's say you trade one stocks, you buy one company. Okay, but for ETF, when you trade ETF, you actually bought a few companies or maybe a pool of a basket. So do you see something similar here? It's actually that if you invested in a basket of securities, meaning that your investment is actually well diversified, and you can trade ETF just like how you trade stocks. So exactly for ETF, okay, it's actually, you can say as a combination of stocks and unit trust funds. Okay, because I just say that something like unit trust, yes, okay, but you can not like unit trust, you need to pay like upfront fee, there is a management fee. Basically for ETF, you trade like stocks. You can buy and sell anytime during the market hours. Okay, so this is a similarity there. It's more like a combination of stocks and unit trust fund. Okay, so I'll give you an example. So this is a chart for S&P 500 index, which represent the largest 500 companies in terms of market cap, okay, market value. So if you are buying this S&P 500 ETF, okay, which means that you are buying all these top largest 500 companies in the world, including Apple, Microsoft, Amazon, Alphabet. Alphabet is mother company of Google, okay, and Tesla, etc., etc. So if let's say maybe some of us here are not familiar with US market, then take Malaysia market as an example. So this is KLCI index, which represent the top 30 largest companies in Malaysia. Okay, who do we here have? Okay, Maybank, Public Bank, Petronas, Tenaga Nasional, Nestle, Genting, etc., etc. So just imagine that if you are buying this KLCI ETF, okay, your investment return will run according to this index. So if let's say the index goes up, you make profit, okay, vice versa. So if index go down, you know what's happening lah. Okay, so as we can know, ETF performance and index performance are just like best friends. So they are like they move towards the same direction. So when index performance is good, so does ETF. Okay, so this is a short introduction of what really ETF is. Okay, just a simple one. So just imagine that as long as the index performance is good, then ETF performance will be good as well. But of course, when we know what is ETF right now, it will depends on what is the ETF attached with. Okay, so just now, as I mentioned, it's actually KLCN index. So it can be different products, for example, like commodities, like gold, like oil, or something like that. So it can be different. Okay, it can be different. So now we know what is an ETF. Just a quick question: does it sound like? Sounds like as how should I say it? Like the someone mentioned just now. Okay, does it sounds like unit trust? A bit, right? Sounds like unit trust. Correct. So actually, for both also unit trust and ETF also pool investment securities, which both performance will be based on a benchmark. Okay, but ETFs and unit trusts are very different. Okay, this is the difference between ETF and unit trust. So first of all, we will look at the investment objective. Okay, ETFs are more to like a passive style of management. Okay, compared to unit trust, you need to be active, very active, managed by the fund manager. Okay, buy in and buy out anytime, just keep updated in the market. Okay, but for ETF, right, it's actually passive managed. They just go according to index. In other words, go according to economy. When economy is good, then your performance, your investment performance is good. When economy is bad, then don't expect too much for your investment lah. So this is how ETF manage. Okay, and we know that actually by time, if you have a longer period of investment horizon, you can actually, the investment is actually growing because the economy is growing. Market is there, market demand is there, therefore the economy is growing. So this is how different between ETF and unit trust. And secondly, ETF are listed and quoted in a stock exchange, as I mentioned just now. So it is available to be bought and sold like stocks throughout the trading day. For example, like us in Malaysia, our trading hours is Monday to Friday, 9 to 5. Okay, so exactly same for ETF. Okay, you can actually trade in your own brokerage account. Okay, and you can actually find ETF in your brokerage account as well, in Bursa Malaysia as well. Okay, so compared to unit trusts are you can actually buy and sell only via fund management company or licensed and certified unit trust agent. So this is the difference between unit trust and ETF, and they are also different in investing costs and minimum investment amount for ETF and unit trust as well. So for unit trust, as we know, unit trust fund usually impose upfront sales fee. Okay, whereas ETF is just like stocks. Exactly like stocks. Okay, so there is a brokerage fees and clearing fees for every trade. Okay, and the minimum investment is one lot. Okay, so basically this is the difference between ETF and unit trust. And how about the characteristics of ETFs? Okay, because as mentioned just now, right, ETF is actually a basket of securities. So right now you are actually investing in the whole market instead of just few stocks. Okay, so we take KLCI as an example. If you invest in KLCI ETF, you are investing in top 30 companies in the market in Malaysia. Okay, so you are investing the whole market instead of just a few lah. So therefore your investment will be well diversified. Okay, and secondly is that you don't need to be very active managing your ETF because you are investing for the whole market, and it based on the market movement. So if let's say your investment portfolio grow, then your economy grow, then your investment portfolio will grow. That's all, simple as that. And you don't need to keep monitor or trade in and out by investing ETF. So this is one of the reasons I mean, for Warren Buffett mentioned that ETF is a way that you can sleep and earn money, because basically, technically, you don't need really to do anything. Okay, as long as the market grow, your investment portfolio grow. So this also suits our topic for today: passive investing with ETF. Okay, because you are doing it passively. Okay, so talking about regarding the fees, right? Is actually lower compared to unit trust funds. Okay, so it depends on how you want to manage it into your portfolio, because the management fee for ETF is usually less than 1%, and ETF only incurred brokerage fees, and it compared to sale charge for unit trust is different. So what they have is actually brokerage fees instead of sale charge and something like that. Okay, and then maybe a quick question to the audience here. What do you think about the liquidity and the availability of ETF in the market right now? Okay, maybe because I think some of the audience invested in ETF before. Okay, so how do we actually invest in ETF? Okay, as I mentioned, you can invest through your brokerage trading account. Okay, and it's actually available in Bursa market, so it's actually very easy to trade. Okay, just like normally trading stock, place order, buy, sell order, that's all. Okay, and it's actually fully transparent in the market lah. So any announcement will be publicly available in the market. Okay, and last but not least, never forget that it's actually very high liquidity for ETF, because the bid and ask price are also available in public. I mean publicly, due to it is open trading, so everyone can trade ETF. Not like for example, like bonds. Okay, bonds, maybe you need certain level of income. Okay, only you can trade bonds or something like that. So ETF is very easy and also how should I say, affordable and available to everyone. Okay, so how about the next thing? Okay, we start to go into a more important topic. Okay, which is the things that we need to know about ETF. Okay, so for those who trade ETF, okay, is there anyone can give me some ideas that what should I look for in ETF? For example, I give you the first one. The first one will be fees, okay? Because you have to look at the fees for the ETF. How much is your cost of investment? So besides fees, is there any things that we can look into for ETF? Anyone? Okay, see someone say performance. Okay, and then someone mentioned about the liquidity as well, right? Because you need to ensure the fund performance, okay? Fund performance is in the right order, okay? And also, what is the liquidity? What if you bought an ETF and there's no liquidity, so you cannot sell it, okay? So this is the few key things that we need to look at. Okay, so first, what do we care most when we're talking about investment? Yes, fees, okay? Because as I mentioned just now, the first thing that I will look at is the fees. Okay, talking about ETF, why is fees important is because that actually not only about ETF lah, any kind of investment as well. Because the fees is actually the cost of our investment. Okay, and it will affect our return, directly affect our return. So for ETF, because it traded like stocks, so actually you need to pay brokerage fees, clearing fees for each and every transaction you make. So just like stocks, okay? And you can also buy and sell ETF during market hours, as well as key in advance order too. So you can actually place limit order, stock order, this advance order, you can do it for ETF as well. So I think this part is very clear, right? Because it's actually just like how we trade stocks, okay? And but however, there is one thing, since there will be brokerage fees incurred in every transaction, right? Trading fees can actually quickly add up to reduce our investment performance if we do frequent trading. Okay, this is why talking about depends, of course, because I understand that for stocks there is some fundamental traders, there is some technical traders. No right and wrong, but definitely you can see that if you trade frequent, okay, because the more you trade, the more fees you have to pay. So it will stack up and it will reduce your investment performance. And one of the reasons that ETF is not suitable for short-term trading or maybe technical trading is because it moves, it's like a, how should I say, when you are investing in a market, okay, when you are investing in a market, you are investing in like a giant elephant, okay. Will it move? Yes, it will. But do you look at elephants, okay, can they run faster? Don't laugh, actually elephant can run faster than us, okay. The world fastest runner, okay, Usain Bolt, if they run in top speed, actually lose to elephants, okay. So actually elephants can run faster than us, okay. But the thing is that you want elephant, especially giant elephants, to move quickly. It's not so easy for them. So imagine that if you are investing in the whole market needs some time, needs some momentum to run, okay. And you frequently trade in and out. So not much different on that. The earn you gain, but you are paying a lot of fees for that. So this is why I wouldn't recommend, especially for my client as well. They did ask me, I mean, can they add ETF in their investment portfolio? I say definitely yes, because it's a very good investment tool. But you need to know that if you are trading ETF, okay, or you are buying ETF, it's for long-term perspective. You are looking at the long-term economic growth regardless of, I mean, like depends on which country or maybe which industry or maybe which commodities you are looking at. Okay, actually for long-term growth. Okay, if you trade, I mean, very short term, not to say cannot, you can do that, just that you need to aware of the fees lah. Okay, so lastly, what we need to know, the most important one is expense ratio for each of the fund. Okay, for ETF fund as well, because expense ratio is actually the percentage of the fund, okay, total asset, which needed to be covered for operation expenses. Because I think everyone understand, right? In order to run a fund, in order to run a ETF, I mean, exchange traded fund, there is definitely some overhead costs, I mean, for example, like if you, let's say you hire someone, you need to pay them salary, and then you need to pay for rental, you need to pay for the electricity, utilities, whatsoever. So this everything we consider as an operation expenses for this fund. So every year there will be a certain percentage of amount withdraw from the total asset to pay for these expenses. So this is why we need to look at the expense ratio. The fund total expense, we need to take certain portion to pay out all these expenses, and in order to ensure that the fund running well. Okay, so usually, but don't worry, because usually we can get all this information, expense ratio, in the fund fact sheet. So of course, compared to other funds, since we can get this information publicly, compared to other funds, of course, the lower the expense ratio, the better. Okay, so is it clear up to here? So the next thing we have to look at is the underlying fluctuation. Okay, so as I mentioned just now, ETF is actually just like mutual funds. Okay, so it's highly diversified, but doesn't mean that it is immune to volatility. What does it mean by that? Which means that although it is diversified, highly diversified, but doesn't mean that it won't have volatility, because it depends on which type of index you are tracking. Okay, it can be more markets. Okay, as I show some example just now, S&P 500, there is a US market. KLCN index, it is a Malaysian market. Okay, and then you can actually trade for commodities as well. So oil, Brent oil, crude oil, WTI. Okay, or maybe how should I say, gold. Okay, so or maybe some specific industry. So if let's say what you are trading is actually high volatility, then definitely you need to I mean, the market, if let's say the market alone is high volatility lah, then your investment will be having the same issue as well. Okay, so for investor, right, really need to identify what is the ETF you're tracking. Not like, oh, okay, Vincent just said that investing in ETF is good. Oh, Warren Buffett say, as long as you invest in ETF, you can sleep and earn money. Okay, but you need to know what you are investing lah. If let's say you are investing in some high risk commodity, then that is a different story. Okay, so you need to identify what this ETF is tracking, and you need to identify what is the underlying risk behind from it. Okay, so I give you an example right here. Okay, so this is the green one. Okay, the green line is actually international ETF, for example. Okay, and then the black one is crude oil. Okay, fluctuation, and the blue one is S&P 500. Okay, so I take S&P 500 as an example. You can see that if let's say you are trading, for example, like commodities like oils, the fluctuation can be very big. Although it's still going up, okay, you can see that it's still going up, but the fluctuation is actually very big. Compared to, if let's say compared to S&P, okay, compared to S&P 500, it's slow and steady. So this is the thing that you need to know as an ETF investor. You need to know what is actually tracking in before you buy it. Okay, so this is the one. And one thing, okay, is very important also, liquidity. Okay, so in terms of liquidity, right, because ETF is traded publicly, so which means that we can ETF liquidity is actually based on public interest. Okay, we have several types of ETF in Malaysia, I mean in Bursa Malaysia, and then it doesn't mean that each and every of the ETF is highly liquided, because it's based on public interest. So this is one thing that you need to know yourself. If let's say this, for example, this specific ETF, okay, not really people interested on it, right? Just for example, not really interested on it. So if it have a low liquidity, therefore, just like we buying stocks, if let's say stocks that have a lower liquidity, then it will be a bit hard for us to get in or get out on this investment. So either we need to pay for a larger spreads, or we need to like just accept that or lower down our return, lower down our expectation of or something like that. Okay, so example right here, if let's say there is a ETF, bid is 865, okay, and then what's the ask price? Ask price is 87. So people willing to, there is a bunch of people willing to buy at 865 and a bunch of people willing to sell at 87. So the spread is very small, right? The spread is very small, which means that this ETF have higher liquidity. Okay, so in other words, if let's say it's actually in the ask price is 90 cents. Okay, I don't want to sell in 87 cents. You want to buy from me, you buy in 90 cents. So the spread you can see is higher. Okay, the spread is larger. So which means that the liquidity is actually lower for this ETF as well. Okay, so this is one thing that we need to know also. And last but not least, there is actually different kind of ETF. Okay, because especially in Malaysia, we actually have leverage ETF and inverse ETF. What is a leverage ETF? Leverage ETF means that it is a multiples of the performance, okay, of a benchmark. Okay, what do I mean by that? Okay, which means that whatever performance, for example, like if let's say my leverage is 2 times, okay, 2 times leverage. So if let's say the market grows about 10%, I get 20% return. Okay, vice versa. So if let's say the market drop about 10%, I'll be losing 20%. Okay, so you double out. Okay, like you are adding a extra nitro boost for your investment or something like that. Okay, so how about inverse ETF? Inverse ETF works opposite. Okay, so if let's say the market go up, you lose money. If let's say market go down, you earn money, you make money. So you can take it as usually a lot of, especially like fund house or maybe investment bank, they took it as hedging. Okay, so just to prevent, it can be not only in market as well, so it can be hedging for commodities as well. This is quite common and frequent in commodities world. Okay, so this is the difference. So as I mentioned, you need to know what is the ETF you are buying. So for example, I just take S&P for example. If let's say at this point it's at 1,000 points, okay, and it grew up to 2,000 points, okay. So what happened to your investment? You make double, right? You make double, okay. But if let's say you are buying leverage ETF, okay, leverage ETF, which means by here you actually make 1,000. But if let's say you are buying leverage ETF, okay, if let's say it's 2 times, then you can make 2,000 from it. Okay, so vice versa. So if let's say you buy inverse ETF and the market grow, then you cry lah. So yeah, so that's why I mentioned that you really need to know what is the ETF you're investing in. Imagine that I just buy an ETF and I close my eyes. And then I just don't look at it. Okay, but actually you bought an inverse ETF when the market is booming. So what happened to your investment? You won't be making money. Yeah, simple as that. Okay, so this is the things that you need to know about ETF. Actually, quite simple, straightforward. Okay, for ETF, it's not a very complicated investment tools. Just that maybe for some of us, we are not so familiar with ETF. That's why we don't know what really ETF is, and we don't know how to invest or maybe utilize ETF, put it in our investment portfolio, because it's actually very simple for that. Okay, so the next thing we need to know, how should we evaluate ETF fees and also performance? Okay, because ETF, as I mentioned just now, we have fees, right? Okay, so how should we evaluate the fees? How should we look at the expense ratio? And I remember someone just mentioned that for ETF, how we compare ETF among each other, we look at the performance as well. So this is the key thing. How should we do for that? Okay, so the first thing we need to do, of course, is look at the past performance. Okay, so actually just like other investment, is exactly the same. You can compare different ETF in the past performance with each other. Okay, so you can compare, for example, like if let's say you are comparing a market, okay, different country market. So the performance of ETF can actually represent how strong the economy was for the market. Okay, and you need to make sure that you understand its core benefits. So as I mentioned just now, the fees, the underlying factors, what is this ETF is tracking at, okay, and liquidity as well, and whether it is leverage or it is an inverse ETF. So this is a very sure before you make any comparison. You don't compare an apple with an orange, right? So imagine you compare an inverse ETF with another normal ETF. So definitely you will see two different graphs going a different way, because you are comparing the wrong thing. Okay, so you need to know what we have to compare based on the past performance. Okay, so next will be, as I mentioned, the fees. Okay, the fees, or we call it expense ratio. So just now, as I mentioned, expense ratio, because expense ratio, it will be including some management fee, okay, and trustee fee, custody fees, some license fee. You need to get licensed in order to run a valid fund, right? So there is a license fees as well. So, but for us, right, don't need to go necessary. Not necessary for us to go in every details of each of the fees, because it will be very complicated. Don't try to make it like, okay, Winson tell me that we have to understand the fees. So I dig down the information. What is the annual management fee? What is the trustee fee? What is the potential, for example, like overhead costs it might occur or something like that. We don't need to go so deep on it, because some information won't be available in the public as well. But in general, we can know roughly how much is the percentage of the fees. So what we need to know is just understand, okay, for example, like if let's say I know my fees is about 0.1%, okay? So as long as my total asset to cover the expense ratio is 0.1 or near there, around there, okay, not going too far, then it's fine, okay? So, and you can actually compare to previous year. So for example, like, is it a case that for previous year, the expenses is actually just 0.1, but recently it go up to 0.5%. So what is the reason behind? If let's say there is such information, right? They will still release inform the investor what is happening, why the fees go so high or something like that. Yeah. So this is one thing we need to look in. Okay, so tracking about the difference of ETF. Okay. So most of us, I mean, like, what is so-called tracking difference? Okay, because as we understand, right, ETF is it trade index, right? It trade index. So is it mean that as long as index move, then it will be automatically move as well? No, because someone have to track it. Someone have to, at behind, have to track whether to ensure the fund is tracked according to the performance of the underlying asset. Okay, underlying asset. So for it can be or it might be wrongly tracked, because this is you can consider it as a human error. Okay, or maybe there is some little tiny difference between the actual market performance and the ETF performance. Okay, so what we need to know is that what is the tracking difference? Okay, how well did the ETF replicate the performance of its index? In short, what is the difference between, for example, like if let's say, I take example just now, if let's say the market, okay, really goes up, 100% from 1,000 point to 2,000 point, okay, does the ETF go up 100% as well? Okay, it might be not though, because there is a bit difference there. So how big is the difference? If you told me that the difference is about 5% or 10%, then a bit too big lah. Okay, too big to have such error. So usually will be near there, around there. Okay, so this is one thing we have to look at. Okay, and as I mentioned just now, when the index increase, did the ETF increase by the same amount as well? Okay, when the index increase, did the ETF increase by the same amount as well? So basically, what we need to know is that just like you are tracking, okay, I make it a very simple way. Okay, maybe sometimes, maybe for some there will be still a bit too technical. I just make it a very simple way. Imagine you are hiring a person to help you manage this ETF. Okay, this is the ETF fund manager. Okay, although you don't know him, but assume that or imagine that you are actually hiring them. Okay, so you hire them to track this performance. Okay, track the ETF performance according to the market performance. So the first thing we need to know that how much we need to pay them. Okay, for example, like you hire an admin, how much we need to pay your admin? Okay, this is one thing. And is your admin efficient or not? Okay, will he or she have a lot of error during his or her work? Okay, or actually he is very experienced, there is a very less or very minimum error made during her performance. So as a, for example, as an employer, if let's say we can get experienced admin with minimum error, okay, and we don't need to pay too much of salary or maybe too much of fees for he or her. Okay, is it a very good deal? Correct. So this is how we look at ETF as well. As long as we can find, first of all, lower fees and also lower tracking difference, which means that the fund manager itself are doing a very good job. He's very efficient that minimize the cost that require for to run this whole fund. So this is actually a sign that this fund is good to invested in. Okay, so this is a few things that how we can actually evaluate ETF fees and performance. Okay, so talking about ETF, right? I think I understand that I believe that there will be a few questions that where can I get information for ETF? Okay, so just a very simple answer for that. You can actually get it in Bursa Malaysia website. Okay, because we have a list of ETF right here. Okay, I directly extract from Bursa Malaysia website. Okay, just visit to Bursa Malaysia website and you can actually go to, or maybe Bursa Marketplace is part of Bursa Malaysia website as well. And then there is a clear list that we can actually look at what is all we have right here. And also, how should we look at ETF? Okay, I believe I have some time right here. So maybe before I end my session, maybe I just do a quick review for everyone. Okay, so we just straight away go to Bursa Malaysia website. Okay, and then we can a quick demo. How should we look at it? Okay. Okay, so this is Bursa Malaysia website. Okay, Bursa Malaysia website. I think everyone can see my screen, right? That's it. Can everyone share the Bursa Malaysia web page I'm showing right now?
Yes, we can see your screen.
Okay, great. So this is Bursa Malaysia website. Okay, actually, it's very complete website, which I somehow I really don't understand. I mean, sometimes like I was like, my client asked me, Winson, how can I find this information, that information? And okay, I don't mean to, I don't want to be mean or anything, but then I straight away told him, okay, you can actually straightforward go to Bursa Malaysia website because all the information you need, all the announcement you need, Bursa is the most completed place to go to get. Even though I go to Bursa website to get the information I need as well. So for ETF, right? Okay, there is a few lah. So you can actually look at Bursa Marketplace, okay, and Bursa Anywhere, Bursa Economy, some tutorial videos available as well. Okay, but today we will be focusing on ETF. Okay, so you just go to Bursa Malaysia, Bursa Marketplace, and then you look for ETF. Okay, you look for ETF. Okay, so this is Bursa Marketplace. Okay, just look for the things that you want. Okay, here are some learning materials here. Okay, I don't want to go too lengthy for that. Okay, and then, okay, so this is ETF. Okay, so you can actually look at the whole listing here in Bursa website. Okay, and there is a short-term, okay, so there is a short-term return comparison for up to 6 months. Okay, and then there is a long-term one. So how do we look at it? I just pick just one or two lah. Okay, for a quick one. Okay, for example, like this leverage ETF. Okay, so as I mentioned, is tracking KLCI daily index, and then how should I say, it's leverage ETF. So it's 2 times here. You can see from the name, it's 2 times leverage ETF. Okay, and then you can actually compare. You can actually look at the details right here. Okay, so is there any other news, and also for this fund introduction. Okay, anything that we need to know for this one. Okay, and also a few things that we need to know. Okay, just as I mentioned just now. So what is the total net asset for this fund currently? So it's about 1.6 million. okay, 1.6 million. And then benchmark, okay, benchmark is something that we look at, okay. So for example, he's tracking Bursa Malaysia KLCI, and it's actually 2 times. Maybe I make it larger, easier for everyone to see. Okay, I think it's better right now. So, okay, it's actually tracking Bursa Malaysia KLCI index, okay, and it's actually 2 times, okay, leverage. Okay, so as I mentioned, if let's say KLCI at 1 point, your investment for this ETF up 2 points. Simple as that. So if inverse is the opposite way, okay. So the manager fees, the trustee fee, the license fee, this is all the fees. It's actually available in the public. That's why, as I mentioned, you don't need to go to, oh, how much is the amount? How much is the amount, exactly amount that need to calculate? You don't need to go so detailed for it, because all this information is available right here. So of course, if let's say there is any report or any news regarding for this fund, that is available here. Okay. And also other ETF as well. Okay. I won't go through all of that. Okay. Some is in China. Okay. Some with Hong Kong, and then some tracking with gold. Okay. So actually, for everyone, right? If let's say you want to understand more, you can actually go to like the Bursa Malaysia website, and then you just click into it, because it's quite simple. Okay. And then I saw there is a question from Wing On. Okay. Why do we need to pay for the license fee? Basically, they just break down for it, because it's not to say like we pay for it. Okay. It's just that it's actually an expenses. So to make it transparent, they break down in more details. Okay. So because definitely they will have to pay license, and where the money come from, because impossible, like for example, if let's say the market maker, I mean the ETF maker, impossible, they bear the cost, right? So it will be from the total asset. Okay. It's just break down details so that easier for us to see. Else, if they only show expense ratio 0.5%. So what is in the 0.5%? We don't know. So they break down on it. Yeah, simple as that. That's all.
If I may add to that question, Winson,
yeah,
the license fee is to pay to the index provider.
Okay.
It's paid to the index provider, like FTSE provider index, or so it's paid to the index provider.
Okay, so I think that answer Beng question as well. And just a very simple way that you can go to Bursa to have a look at it. Okay, so just to recap on today's session, okay, because my session is will be almost end. Okay, just to recap, actually for ETF, right, not really hard to understand. Okay, because as we know, it's actually quite simple tools, easy available information as well. So not very hard to investment. Just that maybe I can share some of my experience on how should I add ETF in my portfolio. Okay, because I do invested in stocks, I do invested in funds and bonds, and also ETF as well. So basically, I would say that you need to classify, okay, as a proper or maybe a correct way of investment, right? You really need to have different investment tools in your portfolio. Okay. Of course, it depends on your capital as well. If let's say your capital, your fresh grad, your capital is not so much, then it's fine for you to focus 1 or 2. But it's good to have different, because they have different kind of how should I say, they have different kind of ways to perform. Okay, so for example, like recently talking about the market, what you guys think is currently the market is doing good or doing bad? What you guys think? Anyone think that the market is doing good right now? Or you actually think that it's actually not so good since COVID? Actually, since COVID, yeah, since COVID, since 2020, we are not experiencing a very good market, but you have different way to manage your investment portfolio. Does it mean that, oh, market not good, then I don't want to invest? No, it's not a correct way. Okay, because you are in that kind of way, you actually tends to time the market, time the market. So you wouldn't know where will market go. So what we can do is that there is an aggressive one, okay, for example, like stocks, okay, unit trust, which give us a better investment return, okay, more aggressive investment return, but you can actually have some conservative in your portfolio as well. Bond ETF is a very good tool for conservative type of investment. So just like okay, because me myself, I like to watch football and basketball. So if you take sports as an example, you need someone to attack, you need someone to defense. This is how you work in your portfolio. This is how I advise my client as well. Okay, because I won't go all out that, oh this is very good, then we go all in 100% to this. No such thing, because we don't know what really market is. I mean, how really market will go. So this is just a little sharing for my side. How do I manage my investment portfolio? Basically, you need someone to attack, you need someone to defense to give you better all-rounded performance in your team. Look your portfolio as a team or something like that. Yeah, this is what I do. So for today, my session is almost ended. Okay, so maybe we open some time for Q&A session.
Thank you so much, Winson, for doing this segment for us, passive investing with exchange funds. I'm sure all of you here have had a better understanding about how do you do passive investing with ETF. So if you have any questions to ask our speaker today, please write them in the Q&A box. Don't write them in the chat box, okay? Write them in the Q&A box. So the first question on my panel is from CC Gore. Okay, what is the expected return on investment from the Malaysian ETF? It seems like it's not very liquid.
Okay. If you're talking about Malaysian ETF, okay, I will assume you're talking about KLCI because that is the one that reflects Malaysia, not to say reflects, but it's an indicator of Malaysia economy. I would say that if you are looking for Malaysia ETF ROI, right, in short term wise, there would not be a very huge potential for that. This is my opinion because what we have in the top 30 list, okay, we actually know that most of them are from banking sector. Okay, so banking sector in Malaysia is actually very matured. Okay, and if you're talking about the growth for the banking sector, there will be a limitation for that. But when times goes by, okay, because this is one thing. Oh, okay, one thing I didn't mention. This is one thing good about ETF because it tracks the market, not the company. Okay, so for example, we take Malaysia as example. We have the top 30 company in Malaysia, but the top 30 company, is it fixed for the next 10 years? No, it will change. Some will drop out of the top 30 list and some will get into it. So we can actually constantly get into the best or maybe the largest 30 company in Malaysia by investing in ETF. Okay, you don't need to do a lot of switching or and so on. So as long as time goes by, when some tech company able to step in to bigger place, to a larger platform, or maybe represent Malaysia economy, then Malaysia ETF for ROI, there will be a better outlook for that. Yep.
Thank you so much, Vincent. I want to add on to this point that, if you meet any fund managers who are managing ETF, right? Sometimes when the ETF goes down, so you can't blame them for the poor performance. Yes. Sometimes,
exactly.
Say, why your performance of this ETF so bad, right? Because it's not their fault. Because this is passive investing, right? They are not actively managing the portfolio. They just buy according to the constituent stock changes in the index, right? Whatever index has, they just buy according to the index composition. So it is not their fault. It's just because the sector underperformed. The constituent stocks in the sector underperform, in the index underperform. So that's why the ETF underperform. So because they just merely tracks the underlying. So this is passive investing.
Yeah. So I mean, maybe I add on some on Shane's view. Okay. Um, I mean, one thing like, I mean, we need to know that the fund manager are actually doing their job. Their job is to track the underlying index. So basically, they are doing their job, something which they actually cannot control. So for example, like when I'm handling, I'm helping my client for in terms of wealth management. Okay, I every time I will tell them I cannot tell you the because the most frequent answer, I mean, okay, most frequent question that I met is that, Vincent, is the market in lowest point right now? So once I do investment, it won't drop, right? I say I cannot answer you. I cannot answer you this question because we cannot time the market. I mean, like, I don't know Xi Jinping, I don't know Putin, okay, I don't know Biden, I don't have their contact in my phone list. Okay, so what will happening on global economy in terms of politically, I don't know. Okay, but what I can do is that we usually analyze on what's happening in the market, and then we do something that suits the client risk profile the most. We try to minimize the risk, but definitely there will be some risk in investment. This is something that we need to know. So actually for ETF, for those fund manager, it's the same thing. They cannot control the market. They're more like they are doing their job on really to make sure everything is tracking in the right way. Yep.
Okay, thank you so much, Vincent, for providing the input. So this question comes from Maddie. Now, just now we talked about how to evaluate the performance of ETF. So the question here is, if the ETF is relatively new, like less than 5 years of track record, how do we decide if it is a good or bad ETF?
Okay. Okay, if let's say I like this question. It's a very good question. If let's say it's actually new ETF, of course we cannot look at their past performance, but a few things that we still can look at is, first of all, still the most important thing, what is underlying for this ETF? Okay, so if this ETF is underlying a broad market or maybe a commodity, okay, take broad market as example, just very simple. What is the outlook for this market? For example, if US market, China market, so it's underlying under US or maybe China market. We just look at what is the outlook for US or China. Okay, if let's say their outlook is good, then we can foresee that this fund performance will be good as well. Okay, and one more way to track is that although we cannot track the past performance of the fund, maybe we can know the past performance of this fund manager. Okay, because this fund manager might not be new. Okay, previously he or she might be handling other fund, and there is a track record. But of course, this information is not so easy to get lah. Usually for us, like for me, for Shane, maybe easier a bit because we are in this industry. So we know who is the fund manager behind, and then sometimes we have some like some session with them as well. Okay, so this is easier for us, but actually, if let's say the information is available in the fund factor as well, you can actually look at it. This is one of the way lah.
Thank you so much, Vincent. The next question is by Wing On. How do we purchase S&P 500 Index ETF on Bursa Malaysia? Are they available?
Okay, I think this one, Shane, you want to answer for this one? You want to help me answer for this one? I think this is quite straightforward for this.
I answer.
Okay.
There's no S&P 500 Index on Bursa Malaysia lah. Okay.
Yes.
Because no issuer issued that, but closer to that, I think you can buy the US Titans, Dow Jones US Titans 50 ETF, or the one issued by Trade Plus, right? The NYSE FANG index.
Yeah, NYSE FANG is the most nearest to that.
Yeah. So we have exposure to the US market. Just that there's no ETF that literally track the 500 largest companies that's under S&P 500 yet lah.
Yeah. So just not yet for now, because currently don't have issuer who track exactly for S&P 500. Okay, but the nearest one you can go to, as Shane mentioned, you can go to NYC Bank. And then actually for Bursa is actually adding a lot of ETF right now recently. Okay, more and more issuer is coming up. So I don't think we need to wait very long for that. Just a few while, then you will have more choices for that. Yep.
Yep. I think CC made a comment. The US Titan 50, the volume is low. I think I can add my perspective here. All right. Now, even though the volume is low, but every ETF issuer has appointed a market maker who make the market for you. So when it comes to ETF investing, it is not very meaningful for us to look at the liquidity, the volume. It is more important to look at the liquidity. What is even though there's no volume for that day, it doesn't mean that there's no bid and ask. There are always bid and ask because they appointed a market maker who provide quotes in the market. So you don't look at volume, but you look at liquidity. That's more important. No transaction doesn't mean that there's no liquidity. There are liquidity. Okay, unlike stocks is you need to check the volume because the liquidity in the market is provided by the market participants. Okay, like retail traders, the public interest. But for ETF and structured warrants, there are market makers who make the market for you as an obligation because they are market maker. All right, so this is one thing that you need to know lah. All right.
Exactly.
Yeah.
Because this is one of the reasons that in my slide just now, I mentioned liquidity, but I did not mention volume. Because volume and liquidity can be different, totally different thing. There is one thing that, okay, for example, like if I take stocks as example, if there is no liquidity, meaning that really people don't want to buy, then memang if no means no. Okay, there won't be market maker for that, but all the ETF, they're actually market maker. So you don't need to worry that once I buy an ETF, I cannot sell it if I want. Okay, even though the volume is low, definitely there will be someone picking up there because there will be market maker behind to pick up your order. Get that? Yep.
Yeah. So volume is zero means there's no transaction on that day lah. So that's what it means lah. That to answer CC Go remark. Okay. So you see, actually in Bursa Malaysia listed ETF, you can actually build global exposure. If you don't want to leave the Bursa Malaysia, you don't want to leave the Malaysian shore, you can actually build a global portfolio using the ETF. We have ETF which give exposure to the US market. We have ETF that give exposure to the Chinese market. We have ETF that give exposure to the ASEAN market. We have ETF that gives exposure to the bond market. So you can build a global exposure using all these ETF instruments that are available in the market passively. So this is one consideration that you can think about.
Yeah.
The next question is by Tai Leong. So Winson, what is the time frame required for the ETF to pay off?
What is the time frame required for the ETF to pay off? Okay. From Tai Leong, right? Okay, correct me if I'm wrong. What I understand is that how long can I see returns from investing ETF? I understand the same meaning? Okay, so okay, for ETF, right? If you require to ETF to you see the payoff, you see the return, as I mentioned, actually needs longer time compared to other investment tools because it's as I mentioned just now, it's a giant elephant. You're investing in the whole market. Okay, so unless the market is very boom, which is exactly not happening right now. Okay, unless the market is very boom, every day the index can up a few percentage or something like that, then you can see your return very fast. But for ETF, right, usually I will recommend you really need to have patience for that, and then you really need to take some time, at least a few years, to see the return because when there is a recession market, then your investment in ETF is quite hard to perform because the market is not doing good. But if let's say we know that market is a cycle, after a recession, definitely it's an expansionary. So whatever happens up, there will be down lah. So in long term wise, you will see. So for ETF, right, you will expect a longer investment horizon, usually a few years or maybe decades as well. Depends on what you are investing. Don't expect like I can get immediate return in 1 or 2 months. Not to say impossible, but less likely for ETF.
Yep. In fact, during the bear market, you can also make
Yeah.
money through ETF. That's
Yes, correct.
inverse ETF, which Vincent just mentioned, right? So in relation to this, there's one question on inverse ETF on my screen here.
Okay.
Which is how do we do hedging using inverse ETF?
Okay. How do we do hedging in using inverse ETF? Basically, as what Shane mentioned just now, inverse ETF is one of the way that we can make money during bear market. So we know that market won't be good all the times, right? Okay, won't be good all the times. There is bear market. So when bear market happens, and you, or maybe you, when you foresee recession, you can actually invest in inverse ETF. So because you won't be only investing like 100% of your money to invest ETF as well. Maybe you have other investment, which, for example, like unit trust, which still tie with market movement. So if let's say you expect there will be a recession coming soon, so you can actually bought in some portion of inverse ETF, okay? When other of your investment tools making losses, but you still have your inverse ETF to make profit for that, okay? So at least you hedge off some market risk on that, because as I mentioned just now, we really cannot 100% time the market. But during bear market or bull market, there is different investment tools to help you manage your investment portfolio. So this is the good thing about ETF, because you have choices. The market is good, you can buy leverage ETF. The market is not good, it's bad, you can actually buy inverse ETF. Yep.
Yeah, but one thing to point out is that for these leverage and inverse ETF, they are meant for sophisticated investor.
Okay.
So there are a few criteria to enable you to trade the leverage and inverse ETF. You can check out in our leverage and inverse ETF webinar sessions to understand what are the eligibility for you to trade the L and I ETF. Okay, because these are sophisticated tool that will give you leverage. So Securities Commission need to ensure that you must know the product well before you trade, because if you handle wrongly, the compound effect may work against you. So this is an additional knowledge for you to learn. Okay, the next question is an ETF suitable for those who are only free after working hours and weekend? What do you think, Vincent?
Yes, actually. Yes, because what is our topic today? Passive investing with ETF, correct? So in short, you don't need to monitor so much, you don't need to trade so much, or maybe you don't even need to do a lot of things by investing ETF. So if you are very busy, okay, you're very busy, you're only free on during off market hours, nighttime, or maybe weekends, okay? So during the trading period, trading day, which means that you are not able to look into market, okay? So if you invest in a very aggressive, for example, like stocks or other investment tools, then you are facing a higher risk on that. But investing in ETF, you don't need to worry about that, because even though the market is very bad, okay, less likely that your ETF will drop 10% or 20% in a day. Okay, so the fluctuation won't be so big as well. So it's actually good for, or maybe suitable for those who are busy, who don't have time to really trade too much, and it actually suits the topic today, passive investing with ETF.
Yes, precisely. The next question is by Ng.
Okay.
Among the providers of ETF, which one would you say provide the best liquidity and the lowest spread?
Oh, wow.
Interesting question. Okay, I would also
Wow.
want to know. So, Winston, what do you think?
Okay. Um, this is an really interesting question, but okay. Um, okay, to be honest, I couldn't answer for this question because the current one doesn't mean that I mean the current performing one doesn't mean that others, I mean in future they will be doing the same thing as well, because the liquidity, the volatility is actually also based on the underlying asset as well. Okay, so imagine if let's say you are actually underlying on copper, for example, okay, commodity copper, okay, and from the other provider, okay, there is a ETF on commodity as well, but via I mean in tracking gold. So which one will be more attractive to investor? Definitely will be the gold one. But does it mean that the first provider is doing a bad job? No, because what they are doing is actually to fulfill some market needs. Maybe for their ETF alone, not only targeting retailers like us, maybe they are targeting a fund manager or other hedge fund manager or something like that. Okay, so I would say that there will be, I won't say which provider is the best or anything, because really have to depends on what they do as well. But still the key things actually we don't need to focus on. For me, I don't think we need to focus on who is the provider. Okay, as long as the provider is licensed, which definitely they are. Okay, so as long as the underlying assets are the one that we wanted to track, and a few things that we mentioned just now: expense ratio, the fees involved, and then the maybe the track record of the fund manager or anything. Okay, so it will be a good tools for us. Yep.
Yep. But if I may add to that, if you ever spot that the spread is too wide, you may actually lodge a complaint or give a feedback to the issuer, so that the issuer is aware that this happened at what time and what product, and how wide is the spread. Are the market makers that the appoint doing their job to ensure that the bid and ask is reasonable? Yeah. So you can let them know. Okay, how come it's so wide? Is it always like this? So you can
Yeah, you can question them. You can question them and then let them alert on this issue as well, because it's their responsibility to ensure the spread is keep not too wide for investor.
The next question is, for those ETFs that are tracking the overseas market, how do we evaluate the effectiveness of the ETF tracking the markets?
Okay, so basically the same thing as well, the tracking difference. So how do we evaluate? Okay, if you look deep into the annual report or the report that given for ETF, actually just like any other reports, they have a details on each of the thing that we need to know. Just that maybe we need some time to go details in the I mean the details of the whole report lah, which sometimes is very lengthy, but we need to do that. No choice, because if we wanted to get information, okay, we need to work harder lah. That's one thing. But of course, if let's say you don't want to spend too much of time for that, just a simple way that you can actually calculate the so-called percentage of the movement compared to the market. So if let's say you know this one is tracking NYSE FANG, tracking S&P 500, get the same data, which the index is, okay, get the same period, the period of time. For example, I want to get year to date from 1st of January 2023 until today, okay, 31st of May. So within these 5 months, what is the percentage movement? Compared to the index, what is the percentage movement? Is it very big difference or something like that? Yeah, this is one of the lazy person way lah. But if you want to go in details, then you can actually go to the report there, because all the details are inside the report. We just need to yeah, work hard a bit.
Thank you, Winston. I find this question from Stephen, quite interesting. Okay.
Okay.
Now, ETFs are supposed to be passively managed. However, Katie Wood ETF like ARK ETF is not completely passively managed. How can we know before investing that they are not 100% passive invested?
Okay. The benchmark is actually very important. So, for example, like ARK ETF, is actually investing. I mean, they are focusing in ARK fund, which Katie Wood is managing. So you know that Katie Wood will change her direction or maybe her strategy based on market conditions. Okay. But let's look at the example that we mentioned just now. I mean, like we took KLCI as an example. The benchmark is KLCI index. Okay. So it's actually very clear. We actually look at KLCI index. Does KLCI index managed by anyone of us? No, right? So if let's say no, then it will based on market movement. So this is, we know that it is a passively managed. So if let's say an ETF, because as I mentioned, ETF not only tracking broad markets, not only tracking commodities, some track specific industry as well. So for example, like ARK ETF, we know that it's tracking on AI industry. Okay, so who is the one who managing? Okay, what is their strategy? So if you take Katie Wood as an example, definitely it's actively managed. If the ETF is tracking the fund that actively managed, then the ETF will be not 100% passive as well. But if let's say it's tracking, usually if it's tracking by broad markets or commodities, which none of us can control the market because the market is very huge, none of us can control the market, then it's passively managed. Because I mean, like, who can control? Of course, there is someone who can affect but who can control the price of gold to go up? It can be affected by someone, but the person cannot be controlled 100%. Yep.
All right. Thank you so much, Vincent. I find this question by Wing On is also pretty interesting.
Okay.
Now we know that there are robo-advisors such as Stash Away, right? So his question is, which one gives better return? Do we invest through ETF fund, through the robo-advisors such as Stash Away, or through Bursa?
Okay. Through Bursa, I understand. I'll be understanding through investing himself, right? Okay. Or investing ETF. So if let's say you're comparing ETF or robo advisory, okay, I would say, okay, because actually robo advisory, right? They do have something that maybe most of the people don't know. Actually, robo advisory is not so passively managed. They have rules behind. Okay, when they trigger something, or maybe the market triggers something, the robo advisory will automatically buy or sell. Okay, who make these rules? Human, right? So whenever, although we call it as a robo advisory, but the trigger point is set by human. So there is still not so passively managed compared to ETF. Okay, so I would say that of course some will be performed better, but in general, or maybe in overall, or maybe in long-term wise, right? I believe ETF still performing better, because even if ETF can can perform better than hedge fund manager, the hedge fund manager is very famous, very famous hedge fund manager. So because basically, the least you time the market, the more that you able to gain. So ETF is a way that you don't need to time market for that. So in my opinion, it will be ETF.
All right. So the next question is, does ETF pay dividend like shares? Do they provide quarterly or yearly performance report like unit trust fund?
Okay, so basically, because they are tracking for index, okay, so they don't really buy into stocks. Okay, so for the dividend part, okay, so basically it will represent in the NAV the value there. So there won't be like dividends go into our bank, go into our pocket, something like that. Everything, if let's say they gain something, they will reflect back in their net asset value.
All right. Let's debunk this myth by Cole. If the market maker were to provide liquidity, does it mean that the spread between the bid and ask will be controlled by them? If this is the case, will it be very difficult to make money from ETF?
Okay, the market maker job is to ensure liquidity in the market. Doesn't mean that they will control the market. So if let's say, for example, if let's say there is an ETF is very actively traded by public, since it's actively traded, so the demand and supply is there. When the demand and supply is there, definitely the bid and ask spread won't be too big. Okay, so basically, in that case, right, market maker don't even need to do anything because they don't need to. Their job is just to ensure there is liquidity there. Okay, and the fame or those high volume ETF, they already have the demand and supply. So the market maker don't need to create any more demand and supply, which they don't control the price. But their job is to ensure if let's say there is no demand and supply, they create some to make sure there is liquidity. That's all. So they actually don't control the price. This is not, they are not allowed to do that, and they don't need to do that as well. Yep.
Right. So it looks like we have run out of time to do more question and answer. So yep. So with that, we'd like to thank Winson from
Thank you so
Bullbearbursa
much
for doing this segment for us. Passive investing with exchange traded funds.
Okay, thank you, Shane. Thank you, everyone. Good night, everyone. Thank you.